Morning, everybody. How are we all doing? Morning, Danny, Paul, Yusuf, Dennis, Virginia. How are we doing? Well, probably not very well at the moment, considering the Euro's going through the roof still. Anyway, we'll look at that in a minute. Yeah, so it's Friday. It's non-farm payroll day. Busy one today. Lots of news. Morning, Callum. Morning, Sarah. Where's my pen? Today is NFP day. So unemployment rates for Canada and the US this afternoon, 1:30, an hour before market open. We've also got Lagarde speaking this morning. We haven't heard from, central banks. Obviously, Lagarde spoke yesterday, so there's not going to be anything about yesterday's announcements with what they're doing with monetary policy that is going to come out today. But we haven't heard from any leaders since they came out of the Euro summit, financial leaders, as to what they think the impact of what was announced yesterday is going to be. So we may get a little bit of movement this morning. Not quite sure what Lagarde's going to say about how they're going to fund all the defence spending and everything. But anyway, we'll find out. So a little bit of volatility potentially in about an hour and a half. Maybe not. Let's just see where she is. Oh, it's the Women's Day event. Oh, okay. Yeah, probably not going to get any pressing questions from press at that one, but we'll see. It's not a financial event. So yeah, CAD and US dollar this afternoon. So potentially range-bound morning for European session as we prepare for non-farm payroll. But at the moment, not sure anything is going to go to plan because obviously what we've got happening at the moment with Trump. We've got Trump speaking again later. Trump speaks every day. We've also got Powell speaking this evening as well. Where's he? University of Chicago. Again, probably not necessarily going to be anything press related there, but we'll see. So that's today's news coming up. Overnight news, nothing. Very, very little overnight. Vilroy speaking this morning. Very, very little overnight. We've had some very big Australasian moves on the Aussie and New Zealand overnight. There's no news catalysts for this at the moment. I was scanning through this morning trying to find something, but there's nothing particularly exciting there. So just recapping yesterday's news, it just seems like I feel like a newsreader at the minute. Canada will delay second wave of tariffs on the other 125 billion US products until the 2nd of April. So basically, Trump and Canada are buying themselves a month to figure out what to do. So they've shot warning shots, basically, for both. Obviously, Trump put the tariffs on Canada. Canada responded by cutting power to the US because they supply an awful lot of power over the border to the north of America. They've removed all alcohol and stopped importing all US goods. So basically, Trump's gone, haha, here's your tariffs, and Canada's gone, whatever. You can't sell anything to us. And Trump, I think, has basically realized that he's an idiot, and all he's done is destroy the economy of the US. Hence, US dollar this morning taking the usual route down. So that was... things have calmed a little. So we had a little bit of a retracement yesterday in the market on that calming. Whether or not that remains, we'll have to wait and see. Every time he opens his mouth, he seems to destroy something, doesn't he? So that's basically the main crux yesterday, is it all calmed down a little bit. If February data comes in good, I'll feel better about inflation, blah, blah, blah. So there's potential rate cuts coming from the Fed, only 2 this year, probably. Same with Europe, maybe 1 or 2. So interest rate reductions are all calming down because inflation's not going anywhere. So again, it kind of makes everything slightly bullish currency-wise, but everything's doing the same thing at the same time. So moaning about NATO again, basically threatening to pull out of NATO. Basically, it just seems everything that comes out of his mouth at the moment is we want to be our own state. We want to be on our own. We don't want to get involved with anybody at all. And that's it. So that's basically what he is doing at the moment, is alienating all trade, defense, and aid outside of the US, which is fine. If you can survive on your own, that's fine. But don't come calling when China decide they want to take your country, because we ain't going to help. But yeah, so obviously they'll take Taiwan first. But anyway, Trump, we have to protect Japan, but they don't have to defend us, obviously. So yeah, I mean, basically a load of hot air again yesterday. Exemptions on tariffs, basically. So again, it's all this calming down. You have to read basically the big picture is basically he's realized that he's screwing himself and he's kind of backpedaling a little bit, but not fully. So these are all the additional news elements to do with the taxes and things with Mexico and Canada. So basically that was kind of yesterday's upshot. Obviously, the euro rate yesterday came down, which weakened the euro, which is what we would expect to see when we get that happening. And obviously the tariffs started to ease, and that helped with that euro reversal. However, this morning it's all kind of gone back up a little bit again. So the upshot of yesterday was euro are slowing down rate decreases. The Fed are slowing down rate decreases. Oh, I got something stuck in my throat. And world economics is obviously in an absolute mess. So not really too much you can glean out of yesterday. So more of a pause, excuse me, than a reversal. So US dollar obviously still weak. Nothing he's doing is helping this whatsoever. Overnight, we've had some fairly decent movement in the Australian dollar and the New Zealand dollar. So these euro pairs, excuse me, I've got something stuck in my throat. I have to try and get rid of it. Breakfast. So basically we've had more movement to the upside on Euro Odd and Euro New Zealand. So the Euro, sorry, I can't get rid of whatever this is. The Euro basically a little bit of strength in the Asian session. And Aussie and New Zealand fairly weak, so they've taken advantage of that obviously, and we've had a big move to the upside on Euro Odd and Euro New Zealand. This all started the 3-bar reversal yesterday, and the break of that low started to look like we were going to start a breakdown. So the Oz and the New Zealand completely invalidated that this morning. However, when you look at the other euro pairs, we are still holding. So there's your break, there's your reversal. We broke yesterday's low, nice move down. We didn't get down to the next support level, so there's no retest, there's no reason for additional buying here. So I suspect what this is an initial profit take on that leg from whoever got in yesterday, and this is the add point. So what we're looking for today is this to hold until non-farm payroll, and then non-farm payroll to be positive. So if we can get a decent move on the US on positive numbers, we want unemployment to be good in Canada and in the US. That will start that second leg. And as soon as the market sees that second leg kicking in, they will start to take profit on the leg that they've put in. So today there's a good chance of an accelerated downside move, 150, 200 ADR. I would not rule out at all. However, if that news comes out negative for the US and the market is obviously already selling off the US, they're just going to add to US shorts. How that will affect the euro, difficult to tell at the moment. But it seems that every penny coming out of the euro, out of the US, and every penny coming out of the stock market, out of futures and options, is all driving into this euro at the minute. So we'll have to wait and see what happens with non-farm. Everything's on a kind of knife edge at the minute. So I had to do some drawdown control again. So the aggressive drawdown control positions I had on yesterday here, for example, on Euro New Zealand, I didn't take them off yesterday. I was really tempted. This got back into profit yesterday, Euro New Zealand. I was really tempted to take it off yesterday, but I decided to hold all positions and not do any aggressive drawdown control or profit taking and drawdown control yesterday because of the speed and the strength of that leg. It looked like the start. And it probably is on a lot of these pairs, hopefully. But today, Aussie and New Zealand scuppered that plan. So I've put new normal position has gone in on Euro New Zealand up there. I'm putting another aggressive drawdown control position on any bearish price action during the European session this morning, which will obviously have a stop above the highs. In fact, I'm going to place that stop right now so I don't forget. So assuming that is higher day gone in at 125 ADR, that when that triggers, that is the stop. And there's a good chance I might get stopped out on that news. We'll have to wait and see what happens with the news this afternoon, how volatile they, how far they spread it, etc. But yeah, so as you can see, we are looking like we're basing at the moment. So this is this week. Obviously, we're doing a weekly recap today. So this move this week is, unbelievably parabolic. When you look at normal price action, this is going back to 2023. A big month, a big week is that. Yeah, this week here is the biggest week we've had probably since COVID, I think, for the euro. But obviously Trump is creating a new world order. Nothing is going to be the same from this week onwards. We are in a completely new world now. We've got new world powers. The US has basically signed its death warrant. No one's going to trade with the US anymore. Your economy's screwed. I don't know how you're going to make America great by destroying your economy, but that's what they're doing. So either he's going to be ousted and we're going to go back to normal, or this is the new norm. And if this is the new norm, world order is changing, which gives China a shoe in straight away. BRICS that he's been worried about in America, BRICS. If BRICS threatens the US dollar's dominance in the world, we will put 100% tariffs on BRICS countries. Good luck with that. You're on your arse. Putting 100% tariffs on someone who does not want to trade with you and does not need to trade with you is not going to boost your economy. I don't get it. I just don't get it. So something's not right somewhere. Hence, obviously, we're seeing moves which do not make sense at the moment. Aussie, New Zealand today, nonsensical. There's no reason for that to be rallying. So, yeah, everything's in an utter mess at the minute. So, for me at the minute, what I'm going to be trying to do is getting as flat as I can when I can, if I can. No saying that it's going to happen either. And then taking a week or so out and having a look at what the hell is going on, because at the minute there's no way of determining any kind of price action. It's the type of market where you just need to basically press a button in a direction and sit and hold and hope, because that's really all you can do at the moment, because there's no fundamental directional bias that you can forecast. Markets at the moment, options seem to be buying longs on the euro. This is the pound, but obviously it's going to benefit in the same way. Quite how that is going to play out, I don't really know, because the economic growth in the eurozone is going to decline. So the last thing you do is you put your money in somewhere that is declining, basically. So there's a lot safer places to put it. Swiss franc, for example. Yen at the moment, obviously. So yeah, it's very, very odd at the minute. ADRs, weekly ranges you can forget, because everything hit the weekly range on Monday. But main extensions we've got, again, euro pairs, and it's Aussie New Zealand at the moment, as you can see, pound. So it's Europe against Asia, basically. It's, Asia is dropping and Europe is getting pushed through the roof. But the only thing I can see at the moment from a European perspective is increased borrowing and increased debt. In the past, and this is why I say we've kind of got a new world order, a new way of economics working coming in potentially. In the past, normally what that would do would create wealth within a currency, but it doesn't strengthen a currency. It puts a currency into debt. So they have a short-term sort of bond purchase and rally, which will typically be undone very, very, very quickly. So this week and next week is really seeing whether or not this euro continues to rally. And if it does, it kind of that means that we've changed the way that we work with bond purchasing and borrowing and how we see countries going into debt. But we'll have to wait and see. It's something that needs to be kind of investigated a lot further. So for the minute, it's a sit and hold and hope NFP gets positive US news. If that does, then this euro is coming down this afternoon, which would be fantastic. And then it's a case to get flat. Let's quickly look at the indices. I'll come back to RSIs and things in a minute. Stock index hedge, absolutely killing it at the moment. I'm up 50% in the last 5 weeks on that. Not that that really helps an awful lot at the moment because of the losses taking in the position trader account. But so it's not losses yet, it's drawdown. Big difference between drawdown and loss. But yeah, absolutely killing it at the moment. So this morning, FTSE and DAX hedged on both. Big wide range at the moment this morning. So just triggered in. Oh, that's spread. Look, just triggered in on spread this morning, unfortunately, on the FTSE. And we're starting to break short. DAX. Yeah, just tapped into that ORB. So pre-market range is basically being taken today. So short on the DAX. Again, stock markets absolutely all over the place this week. Huge collapse yesterday in the FTSE. That was an amazing profit yesterday. I put a $6,000 day on this variation of the ORB yesterday. This account, which it's a demo, but I'll show you it. I haven't got a P&L on here. Don't think I've got Trade Manager Dash. This did 16 grand yesterday trading ORBs. This is the time to be doing ORB. Volatility. Momentum breakout strategies in this type of market pay your mortgage for the year. Seriously, it's just you want to be ramping up risk in this time. So DAX at the moment, basically we're hedged. Upside target is yesterday's high. Downside target, a little bit tricky downside. 5R is in the middle of nowhere, so that's absolutely pointless putting TP there. Have a quick look, DAX downside. We've got two areas of interest, really. We got this high here, which is this propulsion move. It's absolutely tiny. And then we got ADR. So somewhere in that area, I would look for downside support. So I'm just going to move TPs down ever so slightly on the DAX. We have got that monthly high as well. So just approaching ADR basically. But we got this monthly high, which potentially could be supportive. We have used it once. We blew straight through that level again, though, to make a new high. So obviously market structure, low, high, higher, high, higher, low rather, higher, high. So we're looking for higher lows to go in. So potentially downside propulsion gap. Obviously, what I tend to do with SIH on non-farm payroll days is look at where we are when non-farm payroll is coming out and adjust targets. So tend to just move the TPs away further when NFP comes out, because when NFP comes out, you tend to get a very large move. So we'll see what happens with that one, but those are targets intraday if we can make it before NFP. FTSE hedge, yeah, that's perfectly good. So that's a double bottom, previous day's low, day before's low, and that propulsion move from yesterday's sell. So the sellers are going to be sitting there. So an ADR hit to the upside is a nice short exit. Downside, a little bit trickier. ADR basically, isn't it? So I'm just looking at this area here. That is obviously quite a strong level, which we haven't tested yet. We've got multiple weekly lows coming up as well here. So this whole area here is potential support. We've got support coming up there. So you've got potential bounce points there, potential bounce points there. If that fails, we're at ADR. So that's a little bit aggressive. Considering the account's up so much at the minute, I'm not going to get aggressive with it. I'm just going to see if we get some movement. It's non-farm payroll day. I'm not expecting a lot of movement this morning. So we'll see where we go. No trades yet so far on there. So there's your ADRs, RSIs, obviously all over the place at the minute. So the RSI extensions we've had this week have all played out, most of them. So obviously we completely reset on that flag break. This is kind of what I was a little bit worried about. With this 2-week rally, we've literally had a flag break on it. I've never seen a move like this. If you look at this Euro New Zealand move, and look historically, this is unbelievable. Yesterday was the first down day in 10 days. So this weekly propulsion move that we've got going on, it's kind of akin to this, but this obviously happened a bit slower. This has just obviously taken off ridiculously fast. That's what's coming, guaranteed. That is coming. It can't. The market can't sustain this. There's just not enough volume in the market for a move of that magnitude to be sustained. So it is coming back down again. The difficulty with squeezes is obviously surviving. That's the point of the strategy, is to survive a squeeze. I'm over leveraged on this one on the euro, so it's going to be difficult at the minute. So today's kind of a crux day, but this move at the moment, one of two things happens. If it's a fundamental shift, you will get a flag break long. If it's a normal market structure move, you'll get a pullback continuation. So like I said yesterday in Discord, if you stick fibs on, one of two things is going to happen on a move like this. I'll use the Euro New Zealand as an example. So that was where we were yesterday. One of two things tends to happen one of two things will happen on this, guaranteed. There is only two things that can happen. So it's either going to be a continuation long, i.e. this is the first leg of a new bull market, in which case, obviously, we're going to pull back and continue. At that point, you want to be looking at 38 and 50 retracements. So they will unravel. So within this move, there is speculative ordering, there is commercial ordering, there are hedge fund orders, there's pension contracts. There's all sorts of money in that movement there. The speculative portion of that leg will be removed by the banks, and they will take profit on bank that. That is why you get the pullbacks. It's the speculative moves that are removed from the price action, basically. So this is why we get 38 to 50% typically retracements. They remove half the funds, which was speculative profit making, and then they add more position sizing in, because the fundamentals deem that euro should go up against New Zealand. So that's what we're looking at. So keep your eyes peeled on these levels and look for confluence of order flow within those levels. So look for the propulsion gaps around about those areas. They tend to be where the add points are going to be. So when you're looking for downside targets and you're short, those are the areas you want to concentrate on. So that 38 retracement is an obvious point where we're going to add more size. So that's scenario one. This is now a long. Scenario two, this is not a long. This is part of an A-shaped recovery. Yep, and we're going to form a range. So when we're going to form a range, we're either going to find a previous range high to form balance, in which case then you're looking for a pullback roughly to 50% of that leg again in this particular case. Or we're going A-shape and we're going to come back down and retest those lows, because the move that we thought that was going to be is fundamentally not there. And again, this is the buy the rumor, sell the news type movement. In which case, obviously, you're going to find yourself back down there. You're never going to hold it to that. I mean, if you want to hold it to that, go for it. But you're going to need quite large golden balls to do that. So not for me. So yeah, I'll be looking at somewhere around about 38 retracement. A flag break is typically somewhere around about the 23. So a flag break typically would be that. So your pullback is no more than 20% of the move typically. So that's a flag, a weak pullback, strong pullback, and then obviously we're looking at invalidation of the move. So that's all you can really do with these legs at the moment, is look for potential pullback points. We've just placed a new high today, so Euro New Zealand is going to move up there. So the flag break would be basically now a double bottom. I mean, we've already done the flag break, and the flag break wasn't even 20%. Shows how strong this move is. But now we're looking at this being a 38 to 50% retracement. So that little propulsion gap there is potentially a target, but this is a much stronger order. So that's where I'll be looking for targets to the downside to exit that one. And again, it's a rinse and repeat process on anything that is squeezed like this. You're looking to find where your potential exit point is going to come. So again, here, 50% retracement is in the propulsion leg caused by that balance expansion there. So we had a balance accumulation break, we broke the high and off we went. So this is where they're going to add more size if we are going to pull back long. If we're not going to pull back long, we're going to come back into the previous area of balance and we're going to start trading back down here. So it's a case of, is the market wanting now to be bullish euro or not? That's what we need to wait and see. So obviously the first thing we need to do is get some movement started. At the minute it's totally parabolic. It's just not stopping, is it? So morning everybody else. I haven't said morning to Grateful Buster, Gregors, Nav, Chris, Yusuf, Euro and Euro Odd and Euro New Zealand are the elephants in the room. They're not elephants, they're raging rhinos at the minute. Voice check, morning. Barry, Joe, Mumo, Ace for S&P, still Darwin-X. Yeah, well, up to you. Our tightest spread you can get, basically. So any index you're trading, you're usually trading on low time frames. Order execution speed doesn't come into it too much these days because everybody's got good order execution speed, but most of them have. Got some volatility just starting to come in on the DAX. Let's see if there's any news. So you just want the tightest spread you can get, basically. So as long as the spread's tight, use it wherever you want. I use Darwin-X. I also use Global Prime. This is Global Prime. Global Prime have got good spreads. The reason I like Global Prime a little bit more at the moment is the FTSE spread is a lot tighter than Darwin-X's. If you look at the spreads on the US indices, obviously this is the Globex session, so the spreads are a little wider. They are very consistent, which is why I like Global Prime, because they have very consistent spreads. They are less fluctuating than Robo Forex, but Robo Forex is still good. I don't have any problem with Robo Forex. The DAX on the Robo Forex is spreads virtually non-existent. S&P, NASDAQ and everything, yeah, all fine. So whoever you want to, really, for indices, just, when you're trading any time frame, which is 5 minute or sub 5 minute, it's all about the spread. Because if you're scalping low time frames, the spread is a cost of doing business. Obviously commission's important as well, but you want the spread as tight as you can, especially if you're trading something like the opening range breakout. So look at the FTSE this morning. That was my pending order. That is where the market moved to. Look at the size of the spread on the FTSE. It's absolutely shocking on Darwin-X. But I got triggered into that order. Price never got there. The spread is what triggered the order. So this, if I had a zero spread broker, doesn't exist, but if I had a zero spread broker, I wouldn't be in that order now. I would be short only on a clean break, but I'm not. And this is why you have the offset inputs within the EA, so that you can offset the offset distance for the orders, so that you've got that little bit of breathing room. But yeah, Darwin-X, Robo Forex, but you need to use a raw or prime account with Robo Forex for the indices. They're more Forex, that's why they're called Robo Forex. Kind of gives it away. They're very, very good at Forex. Mind you, they're not any better than any other broker, really. So, yeah. Johan, what's commercial orders? So within banks within banks mainly, there's multiple desks within banks. So you have the commercial desk, you have the speculative desk, you have other desks as well, which execute different types of orders. So you'll have basically kind of fund manager desks, if you want to call them that, which they are basically looking after the pension funds. Then you've got hedge funds, obviously, within the banks. So they will have a hedging facility for customers. So those are the four kind of main types of order you have that drive markets. Basically, these two kind of fall largely under the same bracket. So if you look at the COT report, for example, the Commitment of Traders report from the Chicago Mercantile Exchange, you'll see that they segregate holdings down into two types. You've got commercial and you've got non-commercial. Yeah. So non-commercial are speculative. Commercial are commercial. So commercial orders basically are orders that have to be executed within the market for a commercial customer. So Facebook, Tesla, BMW, me. No, I'm not commercial, but any business or large organization has commercial orders they need to place. So I am Microsoft or IBM, for example, and I used to buy a load of chips from China. So I need to convert 200 million US dollar into yuan. So the commercial desk will have an order on their desk saying we need to convert 200 million US dollar into yuan today. So we need to do a transaction in the US dollar yuan. Yeah. Yen would be easier for me to say. So US dollar yen. I'm going to say they're buying it from Japan. So basically that transaction has to be conducted in the US dollar yen. So when you pump $200 million worth of US into the yen, yeah, you are selling US dollar and you are buying Japanese yen. So a commercial order will be basically driving the US dollar yen down. Commercial orders have to be executed usually within a time period, and they're not price sensitive. So they will say, we need to do the transaction somewhere around about that price point. So they will execute 20 million, 10 million, 20 million, 10 million. And this is why you see candlesticks on low time frames going pushing up, wick, push up, wick, push up, wick. They're hitting what's called an iceberg order. And an iceberg order is typically a commercial order where they place in multiple parts $200 million worth of shorts. It doesn't matter how much you come at that with, you ain't getting through. When that order is completed, you'll pop. Yeah, you'll get a volume spike through that level. It's what we call a breakout. That's why they're normally false breakouts, because the amount of volume you're pushing through there, there's no one left on the other side because commercial orders complete. So these orders basically go into the market and they stay in the market. That is transacted. It has moved the market. There is no reason to do the opposite side of the transaction. And that's the key point. When you sell US dollar and buy the Japanese yen in this case, you are doing it permanently. You are giving your dollars to the company in Japan who are sending you goods. Goods come back, money flows out. That move does not undo itself. Speculative orders are orders which the banks and institutions use to generate profit, generate alpha. So what they are doing is they're hopping on the back of the commercial orders and riding that wave with volume. And then when they have achieved a price point that makes them money, they do the opposite transaction. So they hit the buy button when the market is going up, and they hit the sell button when they know the market is going to come back down again. So those orders get 100% entered into the market and 100% removed from the market. So if you have a mix of commercial orders in the market, which is that much, and then you have this much speculative orders in the market, yeah, and the speculative orders are removed, the market pulls back 50% because these orders are not being changed. They're not coming back out in the market, which is what causes market structure. Yeah. So all the push and the pull you see is buying, and then not 100% of the buy orders being removed from the market. They will add more in. Then they will remove some. Then they will add more. They will remove some. They will add more. All the pullbacks are profit takes. The profit takes are only done by the speculative players. Commercial players, hedge funds, pension funds, those are going in permanent. They're either going in permanently or they're going in long term. Think monthly, quarterly cycles. Yeah, and this is why we have market structure. And this is why market structure shifts, which is why we have the reverse alert indicators to tell us when the market structure has shifted. So we were bullish, Yeah. And then the flow of orders switched bearish. So market speculators saw the market going down because of weight of orders. So they added, which caused a larger move. Then they took profit on a portion of that move. And then the commercial orders added more. They took partial profit, add more, partial profit, add more. Yeah. Until there is a weight of orders in the opposite direction. So Japan come in and say, we want to do a Japanese yen to US dollar conversion in the opposite direction. Then we'll go bullish. Yeah. And this is all you're seeing on here. Candlesticks are basically a representation of price over time, showing you bank order flow. Propulsion gaps show you large bank orders. Large bank orders tend to get added to because commercial parties who started to sell here will still have more order flow to execute. They won't get it all done in one go. So they add at those points. Big sell order. Add, 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 add. Overwhelmed. Then we flip back the opposite direction. It's basically how markets work. Unfortunately, there's no indicator on the planet that can predict the future. Therefore, you don't know which way it's going and when. That's trading. That's the bit that's difficult. Basically, companies making business in another country. It's all sorts of things. Commercial orders are literally just orders that banks. So the banks, don't forget, the banks are a business, right? They have customers. Their customers need something done, right? So I, as a business, need to transact with Europe. Therefore, I need to change my pound into my euros and my euros into my pounds on a regular basis. I use a bank for that because I can't do it. The banks do it. I haven't got a choice. So all those commercial orders are basically Bob walks into his desk in the morning at Barclays Banks. He sits down and he looks at his order flow for the day, and he's got tons and tons of euro to shift. He's got a load of pound to shift. He's got a load of US dollar to shift. So basically his first port of call is HSBC. I've got a load of yen I need to get rid of, 100 million. How much yen have you got? 50. Okay, I'll take your 50. Bang. Now Bob's only got 50 left. He's executed that order over the counter with the other bank, and now he needs to find someone to fill the rest of it. If there's no one out there that can conduct the order, he'll put it through the open market. Open market is what we see charted. Over the counter are what banks call OTC transactions. You don't see here. OTC transactions are you scratch my back, I'll scratch yours. There's no commission, there's no costs, and it's done instantly. That's the preferred way of doing business in banks. However, if I'm sitting here with 200 million long and you're sitting there, all the other banks are sitting there with 100 million short today, I have no choice. I'll take all of yours, and I still need to put a load more into the market. So the market makers will drive price up by executing that order, and they will find people at different price points that will sell. Those will be pension funds, hedge funds, speculative traders, all other parties that are non-commercial. And once those orders are executed, we push back down. That's all you're seeing on your chart. It's nothing clever. There's no rocket science. There's no special indicators. There's nothing clever about this. This is random price action based on bank and institutional order flow of money. There is every transaction that buys has an opposite seller. If price pushes up, that person goes into drawdown. Yeah, that's basically the way markets work. It's the same way as they've worked for hundreds of years, and it's the same way as they will always work. As long as there is greed, there will be a need to make money. As long as there's a need to make money, banks and institutions will execute orders. When they execute orders, your job is to guess which way it's going to go. Normally, when you press the buy button, it goes down. Normally, when you press the sell button, it goes up. Because the only thing it does is go up and down. So, of course, it's going to do one of those two things. People are trying to find the indicator or the strategy that tells them which way it's going to go. You don't know unless you've got a phone call to every bank on the planet and you know exactly what the order flow is today. No one can tell you which way this is going. If you phone HSBC now and say, which way is your orders going today? They'll go, well, we're going long with the US dollar yen, 200 million. Doesn't mean it's going up because Barclays are going short with 600 million. So HSBC are going to get run over today. They don't know it yet, but they haven't got a choice because they can't do anything else. Your job is to ride the wave, not predict the future. And that's the bit that people don't get, because they don't know how banks work, and banks drive this up and down. So unless you understand the fundamentals of why things happen, there's no way of predicting the future. And even if you did understand it, you still can't predict the future, because you don't know how many orders each of them has got. And that's just the way the markets work. Same with futures, same with stocks. Stocks are more predictable because stocks have an intrinsic value attached to them. Forex has not got an intrinsic value. There's no a tangible value. There's no tangible asset here. There's nothing you can pick up here. A stock is a company, and a company has a bottom line, and a company has a profit, it has a product, it has a customer base, it has outside influences, it has suppliers. There's a lot of stuff that goes on in companies where you can predict future movement, which usually will go with the price valuation of the company, which increases or decreases stock price. FX, you can't do that, because FX is a dumb instrument. It's just something that floats along and moves up and down based on what's going on in the world. And as we know right now, no one on the planet has any clue what's going on in the world. So therefore, we're seeing some moves which we just don't see normally, because something weird's happening, isn't it? Euro-odd is just going one direction. Could it continue to 2025? Yep, could do. Daily chart, one of the most ridiculous charts I've seen. Yeah. We almost got a bear day yesterday, look. Almost. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. I mean, just 1, 2, 3, 4, 5, 6, 7 days. That was a pretty big bull run, wasn't it? Oh, here we go. We got one here. Look. This was the exhaustion point. Well, this was. I mean, that's what I'm looking for. That's what I was hoping we were seeing yesterday. We're not. We had a down day there, but it wasn't. It was bullish. 4, 5, 6, 7, 8, 9. Pullback. Exit. 1, 2, 3, 4. I can't remember what that was. Can anybody remember what happened? 2nd of August, 2024. Something happened there, didn't it? Was that the yen intervention? No. Can't remember what that was. Yen intervention was back in July. Don't know. But yeah, I mean, ordinarily I would say, yeah, I mean, look at where we are right now. Okay. This is high of the decade. Yeah. So that's COVID, obviously. So it's not high of the decade, because that was 2020. So that's not technically true. This is high of the last 5 years. Yeah. So this is the high point, and this was a parabolic squeeze above that high. We are at the point where this is about to turn, or pull back, not necessarily turn, because we're this is a different world we are now in. But it can continue, obviously. I've said it many times, and I'll say it again. The market will stay more irrational longer than you can stay liquid. Yeah. So every time you think, oh, this has got to be it, the market will go, yep, and it will do what it likes. Because at the minute, the world is changing. The world changed in COVID. The world is now changing here. The world changed when the banking crisis happened and the mortgages defaulted. Yeah, every now and again you get these anomalous moves where the market just kicks you in the arse and takes your cash. And this is one of those. They come along once every 5 or 10 years, maybe. But equally, this afternoon we could be here. Yeah, look at where we are in respect to ADR, and how many times have we seen 200 to 225 ADR moves in the last 2 weeks? Yeah, almost on a daily basis we're getting 200 ADR moves. There is absolutely no reason why non-farm payroll this afternoon and the unemployment rate cannot rally that US dollar and give us a 200 ADR move, in which case out of the lot, or out, you should be out of everything if we get a 200 ADR reversal. But I mean, if your average price is not within 200 ADR, there's a problem with the way you're executing your trades. But yeah, it's just it's a survival game at the moment. So where is that high? Let me just put that high on to the pip. We'll see. My stop's very close to that, a bit too close. I'm just going to move that. What is high of that candle? Just give me the high of that candle. God. I can't get it because the bloody ribbon's on top. I'm not going to be able to get it, am I? Okay, so the high is 171,841. US dollar Swiss 125 weekly range, still coming down. 175, I think that was the weekly range. There we go. So that is that high. Okay. You need to do aggressive drawdown control on this now, right now. Yeah. Stop there. Yeah. This there's tightest aggressive drawdown control trade you're going to get probably this year. Yeah. This is an incredibly important point. It's the high of the last 5 years, basically. So it's the highest point. We are at absolute extreme. There's no liquidity there to grab. Yeah, because the level's way too old. So there will be orders sitting to sell at the previous highs. That's the previous high, and that is the wick rejection going in. It's the second rejection of the day. Yeah, if you need aggressive drawdown control, that one. Also, obviously, this last down candle before the high is going to be your reversal alert. So you can see I've got a pending short sitting underneath this candle, so that if we do reject that high and we start to come down, two things are going to happen. First, we've got a confirmation of rejection. Second, everybody's going to see that. So if you drop down to the 15-minute time frame, the entire world is going to see a market structure shift to the downside. Yeah, and they're going to sell that, which is going to help it along its way. But, you know, we'll see. It's all you can do, isn't it? Look at it and see what happens next. So banks, etc., are executing commercial orders, and then they don't care if it's pulling back. The commercial desks don't know. Commercial desks do not have it. So commercial desks in banks don't make money. They do make money. So commercial desks pay a commission. So if you're an institution and you want to do a large transaction overseas, you pay a commission. Yeah. Same. Think about when you go on holiday, right? You go and change up your money at the post office, or you do it online, or you do it at the airport. Wherever you change your money up, they charge you a commission. That's a commercial desk. Yeah. It's just commercial desks in banks are much larger, right? So their job is to execute an order for you and give you an exchange rate, a price. This is all this is an exchange rate between two currencies. So they give you that price. They execute that order and go, thank you very much, and walk away. That's it. That's their job done. Job done. They haven't got to make money on this because you've been charged a commission to transact. They are a middleman, an intermediary between two businesses conducting a transaction. Yeah. You are paying for the safeguarding and security of money movement. That's what banks do. That's their job. That's what they are. This is what you're seeing, is you're seeing the flow of order execution. That's it. Speculative orders are there to make profit. So they are removed from the market. So think of you with your trading account of whatever it may be. Yeah. If you put that into a long position, you need to take it back out again so that you can withdraw the cash. That is a speculative trader, speculative order. You are speculating on future price movement, which is why it's called speculative trading. Guessing, gambling, whatever you want to call it. Same thing. A bit scary if they don't care about or don't need profit taking. maybe that's why Forex pairs sometimes making big moves. Yeah, exactly. This is kind of 101. This is a problem with trading education these days. Trading education these days teaches you a system. It teaches you an indicator. It teaches you a strategy. It doesn't teach you how the market works. If you don't know how this works, you shouldn't be trading it, because it's important to understand why things are going to happen. If someone gives you a signal and says, I'm short in euro, I'm short in gold now, right? The first question you should ask is why? Well, because I've had an indicator that's flicked and it's placed an arrow above there and it's broken down below there, so I'm placing a stop up there and I'm putting down there. The question is, why are you selling it? Right, you're selling it because an indicator's drawn an arrow on your chart. Yeah. So where is price going next? I don't know. Down, hopefully by 3R. That's not an answer. Why is it going down? Well, because we've had a big push up. So why is it going to go down? Because the banks need to remove the profit element of that move before deciding whether or not to continue it or reverse it, based on order flow that comes in tomorrow. If someone doesn't give you that answer, they don't know what they're doing. And even when you do know what you're doing, it doesn't matter. The banks and institutions will do what they need to do. And at the moment, it's changing, isn't it? Everything's changing in the world. So what we're seeing at the moment is a lot of speculative options purchasing by the looks of things. But whether or not these speculative options purchases are correct or not, some of the big players are going to find out at some point next week, I suspect. They will either be heavily underwater and those options will go into huge losses, or not. But, this is what trading's about in banks. There's a lot of people sitting on a lot of money right now, that have bought this. As soon as this comes down or starts to come down, you will see them all jump ship at the same time. Because if you imagine yourself as a bank, your P&L here is 200K or whatever, I don't know, just making money up. But if your P&L is that, then it goes up to there and it's 205. Then it drops down to there and it's 195. Then it pushes up to there and you're 215. If it drops down to lower than 195, which is the lowest point your P&L has been at in the last 3 or 4 days, that should confirm to you that the move's over. My P&L dropped to there and it's dropping even further. If your P&L's dropping, what do you need to do? Take the money, because you've had a really good run. Well done. So you need to take your money off. And then the next person's P&L goes down to 185 and he goes, I've better take my money off. He takes his money off and he takes his money off. Everybody that's speculatively looking to short the market goes, oh, it's coming down, I'm going to sell it, which increases the speed of it, which is why the market moves up the stairs and falls down the elevator shaft very, very fast. So sell moves happen faster than buy moves, because buy moves are the sell moves are the profit takes of buys. And equally, if the market goes down like that, it will push and pump twice as fast. Look at something like the pound Swiss. So that move there, So that move there took, this isn't a great example. It took 2 days to go up. 50% of that came down in 2 hours. Climbing up the stairs, falling down the elevator shaft. The profit take move is always twice as fast, at least twice as fast as the run up. It's panic. Oh, look at the size of my, think of yourself. Look at the size of my P&L. Oh no, it's going. I need to get out. You get scared. So you do the opposite. It's just the way it works. Morning elevated, Virginia. Stocks can be manipulated? Absolutely. Insider trading. Fear of recession in August. Stocks dropped. Yeah, so that was a stock crash, was it? That the previous spike. It was there, wasn't it? So it's that spike. Whoops. That big spike there. It's much more pronounced, isn't it, on Euro odd? Not quite sure why the Australian dollar got hit so hard on that, but it did. Yeah, that big dump. VIX increased through the roof. Yeah. It will do. What it's all linked, isn't it? What is this? Volatility. What does VIX measure? Volatility. It's the volatility index. Of course, it's going to spike. Don't really have anything else I can say about that. Yes, it will spike because it's measuring volatility. This is volatile. That's basically it, isn't it? It's volatile. But everything is starting to calm down now. We've had first reversals in for a while now, so we are starting to see these reversals starting to kick in, which is great news. But we'll have to wait and see if they continue. So Euro, US dollar, again, retesting highs from yesterday. Euro New Zealand's obviously we know is out the highs. Euro yen's holding. Euro pound is holding at the moment. So we're in the retest zone at the minute. Euro Swiss already reversed and retested. New structure to the downside now. So watch that for shorts today if you want to get in short on that. Euro CAD still holding at the minute. But again, I want to see some selling in here. It's not struggling, isn't it? Struggling to find anybody interested in shorting this. So give this candle, we've got another 5 minutes on this candle. So higher high, higher low, higher high, higher low, higher high, higher low. It's bullish. Nothing but higher highs and higher lows going in. It's a trend trader's dream at the moment, this market. Absolute breakout trader, trend trader's dream. You watch. The market is going to be absolutely flooded with trend trading strategies. YouTube, social media, trend trading strategies, they'll be everywhere. Everybody's now going to absolutely fall in love with all moving averages again. And then they're going to spend 80% of the entire year regretting it. Anyway, right, let's just see where we're going with the ORBs today. So DAX broken to the downside, 3R. FTSE downside. We've just tapped into previous low on the FTSE. So that's yesterday's low, but it's also an old weekly low. Actually, it's an old weekly high. No, it is an old. Oh yeah, it's one of those weekly lows. Yeah. So there you go. So double bottom at that weekly low. So that's where they're buying at the moment. This is what I was just saying about banks and institutional order flow. Yeah. They bought that. Price came back to this level. They bought that area again. 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 They're buying that area again. It's not coincidence. There is an iceberg order here buying up UK stocks. That's just what it is. It's buying up UK stocks at specific price points. It's just what they've been told to do. So that is what is happening. But this is equilibrium of banks and institutions all doing the same thing at the same time. Yeah, because there's a logic to buying stock sectors and individual stocks at set price points. Yeah, and if we keep pulling back to them, they'll keep buying them. So holding nicely. So upside potential on that today for a retest of propulsion. But I wouldn't expect too much movement this morning. It's going to be a fairly quiet one, I think, this morning, because we're waiting for non-farm. So a nice clean break short on the DAX, on the whichever one that was taken. Let me just quickly look and just see what the new ORB V3 is doing this morning. Up 1800, so still up as well. I covered this yesterday in the members stream. This is a new variation of the opening range breakout strategy, but it also works on Forex. So yeah, I tested a variation of it yesterday just to make sure functionality is working, and it's had a blinding day. This was a 30k account yesterday. It's now 45. Admittedly, there's a couple of lucky ones in there, but I mean, what's luck? What is trading? Half of it is luck. You press the button just before it goes parabolic. You didn't do that because it was going to go parabolic, because you haven't got a crystal ball. It's luck. So yeah, we'll see. Right, so that's really all I've got for you today. I can go through the zones, but there's not a lot of point really at the minute. Support and resistance at the moment is irrelevant. Technical analysis at the moment is irrelevant. Everything is moving on fundamentals. So there's not much point in looking at where we think price is going to go, because price at the moment is just going parabolic. There are going to be areas it's going to hit and it's going to find opposition. But right now, we are waiting to see what comes out of the orange man's mouth. And that is what's driving this market at the moment, because at the moment, the world economics and the new world order is being created. It doesn't matter how many technical indicators you have on your chart. They are absolutely useless. There is nothing that is going to give you any inkling as to where anything is going to go in the future. So support resistance, obviously, yeah, that would be an obvious spot. Buying to the downside. I'm short on this at the moment. It's not worth taking off, but looking for their range lows. So, but yeah, I mean, everything at the minute is just lovely A-shaped recovery going in on the Aussie Swiss, on that Swiss movement again. Yeah, 50% retracement, half the orders coming out. Aussie New Zealand, looking for shorts up at the highs. Aussie US already got shorts. CAD Swiss coming down again, looking for double bottom on the weekly. New orders going in on Euro odd, and obviously that's an aggressive, so that's going to stop out up there. Euro CAD holding. You've already got, I don't know if anybody's in Euro Swiss, but I got out the longs here. And then I got a second long entry and I got out there just before it broke that level. I would have been out there anyway. There's no way I would have ridden that, because I'd have been out at the double top. But yeah, if you have shorted this at those highs, which is where I would have shorted if swaps allowed, probably want to look at getting out now, because actually it's a 50% retracement into support. Euro pounds holding, already in Euro New Zealand. I'm going to just adjust those stops. I mean, if that high gets invalidated, there's no point in holding it any further. Euro US double top is going in now. Pound odd long. All-time highs. So, I mean, I really hope this doesn't work out, because I want some Australian dollar strength to come through. But yeah, pound CAD, pound Swiss, long on that one. It's range bound. Pound US, again, that one's all-time highs. Stops on that at the moment at ADR. So stopping out on this aggressive ADR today if we get there. Highs holding at the minute, just. So the next 1 hour candle on this, I suspect will be bearish, because we'll probably move into a range here ahead of a non-farm payroll. New long in propulsion on New Zealand Swiss. New long at the lows. US dollar Swiss about to take the next entry long on bullish price action, if we get any. Got this hourly candle's just closed, so if this is a bull candle, I'll be taking the next long on that, which means I'll be able to move target down into propulsion. That's it. So yeah, not a lot we can do with it at the minute. Just an absolute mess, isn't it? Everything. Right, that's all I've got for you today. Obviously, bear in mind this afternoon is non-farm, so 1:30 this afternoon is going to be interesting. So either we are going to get some continuation strength coming in, or rather some reversal strength coming in on this US dollar, or it's going to get an as expected result, and we're just going to chop for the rest of the day, and then we're basically looking at what hell's going to happen next week. So everything at the moment obviously is riding on what Trump says. So we don't get the impact of this in the UK until sort of around about 2 o'clock, 1 o'clock in the afternoon onwards. So there's not a lot of movement really. We should expect this morning, as soon as non-farm payroll comes out at 8:30 US, that's when we'll see the move starting. And obviously then it's down to whether Trump is going to say something else today. The Ukraine issue, the Gaza issue, the tariff issues, there's just too much going on at the moment to be able to predict anything. So it's one of those horrible months where anything can happen, and it's just a case of waiting to see what the news does, because the news is what's driving everything and always is. But specifically at the moment, the news is absolutely critical. So we are not using interest rates, we're not using CPI, we're not using anything normal to drive markets. So it's completely irrational. So just got to hold on to whatever you hold on to, or get out. Really, that's all you can do at the minute. This is a bit of an eye-opener for me, this one. So the RSI account at the moment is in drawdown, but fine. The Zone Trader account is on the verge of collapse. So luckily, that's a small account. But if that does recover back to normal, I think I'm going to start to move down onto lower time frames. Some of the strategies I've been developing intraday are... this is up 192%. This is this new RB variation, which I'm running on the indices. I think I'm going to, for a short period of time, just drop down and rely on that, maybe as income, and put some more money into short-term stuff. I'll have a think. But if this is the start of some kind of new economic structure that we're seeing unfolding here, because the US is no longer going to be the dominant currency, everything we've ever done for the last 50 years post-war is going to be totally different. So these markets are not going to move in the same way. And if the markets aren't going to move in the same way and the same vehicles aren't going to be used, we're going to need to adapt. So short time frames are always going to be more risky, but short term more profitable. So it makes sense to run the strategy short term as well. So I'll probably start moving over to some more short-term trading, and if I do that, I'll probably start doing the 2 streams a day again, because it'll be important to be more active during the opens than with FX. FX obviously is 24/7. So are you trading the indices this afternoon? I'll see. Always with non-farm payroll, with the DAX and the FTSE, yes, I'm in. I can't untrade these. I'm in them. So I will see what happens with the non-farm move. So when you get obviously the news coming out an hour before the open, that's our normal open. Beautiful exit on the Nasdaq yesterday. Oof, spot on. So yeah, when you get the news coming out at 1:30. If we get a whipsaw and reset, I probably will. If we get a parabolic move, hopefully like that, because it means the US dollar's gone up, but hopefully we get a parabolic move and accumulation, I probably won't, because there is a chance that is all of the order flow gone in on the news, because they had a definite direction, and they will pack up. And we won't get an awful lot of volatility. So it's up to you. It's whenever you look at trading, it's your decision. at the end of the day. So I have not traded the New York session after parabolic moves, and the 15-minute ORB has 100% retraced it and given us a V-shaped recovery on the day, which would have made 5R. Other days, I've seen a parabolic move, and I've been chopped to death and hedged on everything. You can't tell what's going to happen. The opening range breakout is a momentum breakout strategy. If there is momentum breakout, it will work. I can't tell you if there'll be momentum breakout because I've no idea. Neither have they. Don't forget, when the opening bell rings and the initial balance goes in, the direction of that initial balance candle has only one way to be formed. It's flow of orders on those top 100 tech stocks in the US, in the Nasdaq's case. Yeah. If every participant in the first 5 minutes is buying and only 10% of them are selling, we will have a momentum breakout. If the equilibrium is 50-50 of buying and selling stocks, we will get a doji. Yeah. You can't tell what that is going to be. So there may be 10% of the normal volume because we've had non-farm payroll and there's been huge order execution pre-market in the Globex session. But when the market opens, if there's only 10% of the volume left, but 90% of that volume is long, you're still going to get a momentum breakout. It just will be on low volume, but it will still go because they've got to get those orders filled, and they will just push price further to find the orders to get the fills. So, it's a impossible thing to determine whether you trade. It's up to you. But I've seen both cases. This is the thing with trading. Everybody has an opinion on it, don't they? So if I say I'm going long on the Nasdaq, someone has to be going short on the Nasdaq for me to go long because someone's got to fill my order. So there's always somebody taking the other side of your trade. And as long as there are participants, we'll get movement. That's it. It's totally discretionary. So whether it works or not is down to market movement. Days where, like today, I'm double hedged today. I was double hedged yesterday. Yeah, double hedged yesterday, still came up 5% up. Doesn't matter, does it? What will happen today will happen today, and I can't control it. I'm on the bus, and the bus is going somewhere, and I get off at a stop. Nasdaq's a great example. That trade yesterday. I mean, it's a lovely move we got yesterday. So that was the pre-market ORB. That's your open. Open broke short. Buyer stepped in. Yeah. So we went long. So I shorted it. I longed it. Pushed up. Didn't get anywhere. And then the sellers took control. Came down. Hit my target to the downside. Exit. Back to the upside. Beautiful. But that isn't skill. That's back testing. That's testing the edge over a long period of time to understand that the 10 to 20% ADR break has an opportunity of hitting an ADR reversal. It could also have gone 200 ADR and absolutely killed me yesterday. But it's not in my control. Once you're on, you're on. This is the thing. You can't predict price movement. Every now and again, it will bounce from a level. For every time you show me it bouncing at a level, I'll show you 10 times it didn't. Every time it pulls back into the 20 moving average and bounces, I'll show you 20 times it didn't do it. Yeah. Every time you show me a Bollinger Band breakout strategy that works for a month, I'll show you a Bollinger Band strategy that fails for a month. Because it's random. Totally random based on price action. Your job is to get in, apply risk to the market, and get out. That's it. Controlling price, controlling direction, and timing, it's not in your control. ICT kill zones really sell courses. Have absolutely nothing to do with trading. I can tell you that the Lee kill zone is from 2:47 to 3 o'clock in the afternoon. That 13-minute window is where you'll make 90% of your money. Utter bollocks. But today when you take a trade from 2:47 and it works out, you will be my disciple. and I will sell you stuff. Yeah, I've just given my trade secret away. Never mind. I think it should really help to increase your presence and therefore product sales. I'm not looking to sell products, WDS. You're getting the wrong end of the stick. I sell products because I need to support them. I don't make an income from them. Yeah, it's the sideline. A very small sideline. I couldn't pay the mortgage with my sideline, put it that way. We've got a load of alerts going off. Euro New Zealand is off. Euro US dollar is off. And my lights are going off. Okay, so we got some ADRs just gone off there. Euro pound. More strength coming through in the pound again. I don't think this is going to survive this account. Big moves. There is so much crap on YouTube. Yeah. But the trouble is, you know, how do you... People are skeptical about everything with trading at the moment. Yeah. I've run ads on Facebook in the past. And I still do. I spend $100 or something. I have the odd ad running periodically. And all I get on it is comments which say scam. Do not trust. This is a scam. That's it. That's the impression of trading. And the reason it is there is because 90% of it is actually a scam. It's people just doing bullshit online, isn't it? And selling crap. But that's not what I do. I have products that I use and develop for myself because they work and other people want them. So I sell them. I could give them all away for free, but then I become a glorified support agent for no income. Therefore, I'd have to stop doing this. And I don't want to stop doing this. This is why I charge for what? The products, and I give all the education away for free. The tools cost money because they cost money. They have an intrinsic value and time associated to creating them. People can create their own tools or get, or just buy. That's why I do them cheap as well. I'm not, if I was selling them, there's an advert came up yesterday on my Facebook for, was it Everflow? It's a futures. Yes, I think it's that. Yeah, this thing came up on my timeline yesterday, right? It's a futures trading bot for NinjaTrader. I mean, for a start, anything with anything like that in it, run a bloody mile. It screams scam. Meet your box, JBot. I'm designed an advanced trading system that combines machine learning, technical indicators, and price action analysis to identify high probability trading opportunities. I adapt to various market conditions and aim to generate profitable trades by predicting market trends. It's a future robot. SBot. I'm designed as a scalping machine. I'm best used in ranging and sideways markets. Can I see the P&L for SBot, please, for the last week? I'm designed to identify when asset prices deviate significantly from historical averages. A moving average mean reversion bot. RBot. I'm designed to capitalize on turning points using sophisticated algorithms. Turning point, that's what is it, 3-bar reversals? I don't know. High of day, 3-bar reversals. Yeah, I can come up with 1,000 strategies that all do the same thing, but every single one of these bots is giving you a 50-50 probability of a trade working out. That's what it does. And do you know what they sell them for? I've got 7 EAs. I've got 7 bots. I could be doing this. And people will probably buy this shit. Yeah? But it doesn't work. None of this is going to work. And the reason I know none of it's going to work is because as you scroll down the page, there's a load of legal disclaimers showing you that it's not going to work. Damages, risk disclosures, hypothetical performance disclosures, no loss of profits or trading capital, you can't hold us liable for missed opportunities, technical errors, system failures, service issues. This is misstatements spelt wrong, misspellings of things. You know, there's all sorts of stuff. But this is all bull. But I could pump out adverts all day long and have trading robots that I could set up all day long to make money like this. I could set an EA up on 10 accounts, right? And on those 10 accounts, I can just buy on one, sell on the other. Wait 2 hours, buy on one, sell on the other. Wait 2 hours, buy on one, sell on the other. At the end of that day, I can show you a P&L that will blow you away. One of them will have worked because one of them will have picked the top. One of them will have caught the trend. One of them will have had a lucky range day in doing mean reversion and it would have got 100% strike rate. I'll show you that. I'll put it up here and I'll sell you a bot for $499. Tomorrow you'll be bankrupt. It's bollocks. And this is why it's got a bad name, because this type of crap is just flooded on YouTube. This is the biggest scam in the book as well. I might start doing this. 7-day trial. Try my bot for 7 days. Right? What do I keep going on about all the time? Right? This is designed for proper valuation. So with a proper valuation, if you start on a Monday and the market conditions are right, you'll have passed by Wednesday. If you start on a Tuesday and Tuesday's good and Wednesday's good and Thursday and Friday are bad, you won't pass on a valuation. If you start on a Wednesday and it's a trend trading bot and it goes like that, you'll have passed. If it's a mean reversion bot, you'll have failed. Yeah. If 100 people take a 7-day trial every day, one of those days where that 7-day trial starts, the P&L will be amazing because the market conditions will have fallen in line and you will not see any of the loss there and you can't see any of the loss in the future. So every single day that someone starts a trial, one of those days will be a killer. And whoever started the trial on that day, whatever they've put in, if that P&L is up at the end of that 7 days, they will buy it. And this is how they all work. Yeah? It's just nonsense. After 14 days, that person will be going, why did it work in 7 days I tried it and now it's crap? Because the market goes up and down and different price action happens on different days. And the days that you tried that, it was actually right for that strategy. Welcome to trading. Yeah, it's great. But what a business. I've no idea how much these people are making, but they're advertising on Facebook and they've been advertising to me a lot for the last, I don't know, week or so. I've seen their ads coming up, which is why I clicked on it yesterday just out of interest, because I was like, these guys must be spending 2 to 3K a day. How many of these things have they got to be selling to spend that much money on advertising? Yeah. But who's making money out of this? Not the trader, not the person that buys that. Not the poor person in South Africa who's about to lose his house and wants to start trading with $200 he's got left in his bank account to hopefully double it. He ain't going to, because he's paid that for the bloody EA. Anyway, morning blue trader from Pontevedra. Today, long on the pound US dollar. Good one. I was going a minute ago, wasn't I? I seem to be sucked in again. Long pound US dollar, you're buying at the highs. Might work out. At the moment, anything can work, but that is either a flag break long or you're getting in on a false breakout. One of those two things I can guarantee with 100% certainty is going to happen. So just manage your risk. Euro US dollar breaking yesterday's high. Yeah. So ADR coming up on Euro US. Let's see if this is US dollar weakness. I can't really tell against the Swissy. Yeah, it doesn't. It's, at the moment, it's just so hard to tell what is moving and what isn't. Euro odd, so that's broken that all-time high. There we go, it's gone. Well, not all-time high, it's a 5-year high, wasn't it? There we go, so we've blown through that. Just about to stop out on that at 150 ADR. Mental, isn't it? Those kind of companies promote heavily within 6 months have disappeared. Yeah. They haven't disappeared. They're Phoenix companies. So they disappear and they come back again, rebranded. That tends to be what happens. In a nutshell, trading is probability, not is probability, only probability, of course. There are other things, technical analysis, psycho trading, retail positions, macro news, but without probability on your side, nothing. Yeah. It's all it is. It's basically, it doesn't matter what indicator you use, it doesn't matter what strategy you use. Every time you take a trade, there is a 50-50 probability of that trade working out within the parameters that you set. So if you go short right now with a stop loss there is a 50-50 chance it will hit your stop or it won't, because it can only do one of those two things at some point in the future. So price moves up and down through time. Time is a constant, price is a variable. That's trading. Your job is to wrap risk around price movement over time. That's it. So, yeah. And then the market does things like this. Doesn't matter how probable you are. I'd love to know how many people are holding this. If anybody's taken a breakout, there's a wick off spring down here. We didn't get a hold at the high, so, but you know, I'd be so curious to know how many people have got on this trend and are still in this trend. There must be some, but they will be papping their pants every time this price moves down. I mean, I'd been out of that like a shot yesterday, a day before yesterday. Look at that rejection at that previous 5-year high. But then again, it is just an inside bar. So would you get out on an inside bar? Who knows? How do you filter out the scammers on the internet, or which points show you that someone is not a scammer? You can't. Can you? I mean, this is the thing. I mean, it's not. I mean, what that company, for example, is doing is not necessarily a scam, is it? What they've done is they've created a bot that trades, and when you download that bot and you do a 7-day trial, you are evaluating the effectiveness of that strategy. What makes it a scam is that if it's doing something, it basically is. If it's doing something that different to what it's claiming to do, I guess is what I'm kind of trying to say. But if you evaluate something over 7 days, and that is your evaluation period, that you're happy that that thing is going to work, you're an idiot. Not talking to you specifically, but I'm just saying, you know, anybody that buys a bot without testing it for a start, or without back testing it, or knowing what the strategy is an idiot. Or naive, I guess. Not really an idiot, just naive. And it's difficult to classify what a scam is. I mean, a scam is something that's illegal. It's not illegal to program an expert advisor to execute trade on a chart. There's nothing illegal about that, is there? Falsifying results is illegal. Yeah, that is something I think obviously you would get. That's a proper scam. But I don't know how you this is the trouble. You can't tell. People contact me constantly in Discord. The reason I shut the Telegram group down, or I made it read only, was because everybody in there was getting scammed. People were getting contacted by me saying, I've got this amazing set file that's going to double your account in 2 days. And people were buying it. And then they'd contact me and say, where's my set file? And I'd say, what set file? Well, you sold me a set file for $200. I paid you by PayPal. No, you didn't. You're an idiot. First of all, if you come into any live stream, I will tell you that 200% increase on your account is not possible in a year. Yeah. I say that. He says sitting there with an account that's done 192%. But this is high risk scalping, and I'm not expecting this to survive forever. But you know, these results are not a scam. These results, I've been showing them every single day of the week, right? Market at the moment is volatile as hell. It's explosive. Moves are very fast. I'm getting big, strong moves on high risk. I'm killing it. But that isn't going to happen in a bear calm market where we're just floating around. So if I was pushing this EA out on a 7-day trial at the moment, for the last 5 weeks, I've probably made enough to retire if I was selling this for $500. But I know this isn't sustainable, because if I backtest this, in fact, so this is a lie, because I have backtested this and it's running the exact strategy I've backtested and it's doing better than the backtest. But that's probably because of the conditions at the minute, not because my backtest is wrong. But you know, this is how it works in cycles, and you will dump the EA, then you move on to the next strategy. You try that and it doesn't work out, so you move on to the next strategy. Then you try that and it works for about a week, and you go, that's not bad, I'll buy that. And then you buy that and it works for 2 weeks, and then it goes down and you're like, oh, that doesn't work anymore, I've lost all my profit. So then you skip on to the next strategy. You system hop. But this strategy that you found here is the one that works long term. The edge is there. You just went, after a week of losses, you just jumped ship because you didn't like it anymore. If you'd have gone in the next week, it made you 2 times the amount you lost, but you didn't give it a chance. Lost money, lost money, lost money, losing money, lost money the entire week. It's totally normal. But if you're buying EAs and strategies, confirming that it works, confirming that it works, confirming that it works, not confirming it works. No sales this week. Sorry, can't pay the mortgage, love. Oh, well, never mind. Let's wait till next week. That's how they work. Yeah. None of them are running them consistently, which is the difference between, I guess, the way you pick a scammer. Stopped out on Euro odd aggressive drawdowns. The way you kind of pick a scammer, I guess, is if they've been on the internet for 4 years, streaming live every single day, trading in front of everybody, showing everything they do, they're probably not a scammer. Do your due diligence. That's really all I can sort of say, is how you pick someone that you want to follow. I get it wrong all the time, but I don't pretend I get it right all the time. This is the thing. This is the difference. I show what is happening, and it's, at the moment, it's a shit show. But this is the first shit show I've had in 5 years. So there you go. Retail sentiment is 10% long Euro odd. So they're 90% short. Yeah. They will be, won't they? Because nobody's buying this in retail, are they? They'll be shorting it. But that doesn't make it right, does it? They will be right at some point, though. This is the thing, you know, Yusuf, you're looking at retail sentiment. If you look at my FX book or yeah, Euro US dollar, we got 85% of the market short. Of course they are, because they're trying to pick the top. That's what retail does. That's why they fail all the time. You're trying to pick the top and the bottom of the market. Euro New Zealand, 95% are short. Where's Euro odd? Why is that not in order? That's really stupid. Euro odd, 97% short. But you know, when you use tools like this, obviously the logical thing to do is to trade against retail sentiment, because retail get it wrong the vast majority of the time. So just doing this opposite to what they do gives you an edge, 67% ish usually. So just pressing the long button, but it's timing, isn't it? When do you go long? And don't forget that 30 to 40% of the time they are going to be right. So at some point, everybody short there is going to make money, because it is going to come down. Because the probabilities of that being correct are what? Why? Market goes up and down. It can't go sideways. It can only go up and down. Yeah, every bar is bullish or bearish. Occasionally you get one that isn't, but 99% of the time it's bullish or bearish. So by default, they're going to be right one day. Doesn't help you in any way, shape or form. This does not predict the future. I can show you a million instances. And, you know, remember what I had? I don't know if you remember, but I had this on my site. I built my own version of this. And I scraped retail sentiment from all sorts of brokers all over the place. And I looked into it, did analysis on it, and you know what it told me? Some days it will work, some days it won't. There's no discernible edge in this, because you can't determine whether it will or it won't. If they are all short and it goes sideways all day, doesn't help you. If they're all short and the market has a down day, doesn't help you. If they're all short and the market goes up, you can blame that for being right. But that's only a third of the time. So the edge of that is 33%. It's no use. But everybody's got to have a reason to get in. It is a use if you find it useful. Yeah, if you go, every time I do the opposite of this, I seem to make money, carry on doing that, for God's sake. Because you've found your edge. Your edge, you think, is this. It's not. It's just that you've found a way that somehow fits with your psyche of trading, that you press the buttons at the points in the day where this just makes sense and it works for you. And if that works, do it. That's all trading is, isn't it? Is finding an edge that you can execute. Russian forces carried out strikes against gas and energy infrastructure in Ukraine. Funny that. I just saw Australia there, and I was seeing if there's something Aussie based. Right, I'll leave it there today. I'll be back on Monday. We'll have a look at what's going on. Good luck in non-farm payroll this afternoon. It either is going to help or it's not. That's basically what's going to happen this afternoon. And we'll see where we go Monday. But we're just waiting for news at the minute. So, this is the most important indicator on the planet at the minute, because this is telling us when things are moving. But which way things are going to go, it's going to change every day, basically. So short-term timeframes at the moment are the key. The easiest way to make money at the moment, because it's getting in and out, and this volatility means that when it moves fast. Any idea what you do about Euro odd? I'll be scrapping it. I mean, this particular account, there's nothing I can do with this particular account at the moment. It's either going to blow or it's not. I can't. There's no point in closing any trades out on this. It's too far in drawdown. It's just got. It's over leveraged, way over leveraged. So there's nothing much I can do with this account at the minute. But the only thing I'm doing with this is hoping, it's one of those hope situations where it'll either come down. I can add into it, and I don't really want to add any capital in to this, because I've got other accounts which are doing very, very well, all index based at the moment. The Forex side of things is utter crap. So I can add into it to give more margin, but it will either get margin called or it won't. I can't do anything with it. I mean, you can definitely do something with it. I mean, it's a discretionary thing. I'm not personally doing anything with it. I'm attempting aggressive drawdown control, because I haven't seen moves this big that haven't reverted before. So I'm trying aggressive drawdown control to get out of this as fast as possible, ideally by Monday, Tuesday next week. My average isn't far away, look. I'm only 150 ADR away. 220 ADR moves are happening all the time. 200 ADR moves are happening every day. So this is a target that is achievable this afternoon, if not on Monday. So I can either take a 50% loss the day before it reverses, or not. That's your choice at the minute with this type of price action. And those are the valid choices. I am choosing to hold it. And I may or may not be making the right decision. I have no idea. I just know that if the reason I say this in this way today is because if you go back and look at previous streams where I've been squeezed, there haven't been many of them. Oil, pound yen, US dollar yen, pound US dollar, and Aussie New Zealand. There's 4 squeezes in the last 4 years that stick in my mind. Yeah, I haven't ever blown an account in 4 years. There's 4 squeezes I've had that have made me big losses, which have been, in the region of 10, 15 odd percent. Every single one of those squeezes, right? The day after I pulled the plug, they reversed. And they didn't just reverse. They V-shape and A-shape recovered. Yeah, it ended up back down here. Because the majority of these parabolic moves are not real. They are squeezes, and market squeezes are there to generate revenue, and that's it. However, this one, I don't know if this is a squeeze, because you know what's going on. Yeah, we're on the verge of World War III in multiple locations around the world. We've got the leader of the free world dumping every ally he has and forcing every current country to become independent and fund themselves independently with no help from the US and no trade source income from the US. So this is a new world order. If this is caused by the new world order, I don't know how to deal with it. So it's adapted. It's, you know, there's nothing you can do with it. But my experience that I have is every time I pull the plug on a squeeze, it goes the other way. Yeah. If you look at all the squeezes I've done, I can show you them because I know them off by heart. Yeah. Aussie yen, pulled it. Aussie New Zealand, pulled it there. Yeah. Got in here, rode that, pulled it. Following week, 50% retracement. US dollar yen. Pulled it. 50% retracement. Pound US. Pulled it. That was Liz Truss. That wasn't it. It was... wasn't there? It was here. Somewhere around there. Entry was here. Yeah, pulled it. Every single time. Oil. I haven't got oil on this account. Yes, I have. No, I haven't. Oil. I haven't got it on that account. But the last oil squeeze that we had, which was, I can't remember where it was. Where was $80 a barrel? 80. God, it's a while ago that was. So that's Ukraine. $80 a barrel there. Right? It was somewhere in here. I pulled it. I don't think it was there, actually. I don't think that was it. I'm just trying to think. 80. It was definitely 80, because I remember calling every day $80 a barrel. And I said, if we get to $80 a barrel, I'll pull it. And I pulled it. And then it pushed back up to $90 a barrel within days. Every single time. Because the market has a set amount it can squeeze before it literally just does not have any fuel left to fire the cylinders, basically. It can't do it. There's an infinite amount of cash that can be used in the FX markets. However, like I say, the difference right now, and this is what's different to previous markets, this is not the norm by any shape or means, is it? This is a different world order we've got forming now, potentially, and it may not. It may have enough fuel to carry on for an extortionate amount of time, but we'll find out, won't we? Euro odd is nuts. Yeah, it is nuts. Long or short the DAX? I'm hedged. WDS, I remember that oil trade. It was a really useful lesson about how squeezes work. And it made no fundamental sense. No. This is the thing. With squeezes don't, though. This is the thing. That oil trade that I was in, I absolutely killed it. I think it was 6 months or so. I was trading oil, and I stopped trading oil years ago because I don't get on with it. Same with gold. I don't trade gold. I don't trade oil. I don't trade commodities, basically, because I'm just no good at them. And I dipped my toe into the water with oil because of what was going on in Ukraine. And I killed it for months, wasn't it? I don't know how long it was, but I was absolutely killing it on oil. And then oil killed me. And it just took the whole lot back. And it's what happens is this cycle with commodities that I go into where I'll trade it because it starts working and I'll do really well, and then it just takes all my money back. And it's just commodities. For some reason, I'm just no good at them. They don't fit me. I don't know why. But yeah. But again, these squeezes are the ones. The reason they are squeezes, and they make no fundamental sense. If they made fundamental sense, we wouldn't be in them. Yeah. If Trump turned around and said, I'm going to reduce taxes, I'm going to increase taxes on the wealthy, I'm going to implement this, I'm going to reduce trade tariffs, I'm going to encourage growth overseas to invest in the US and all this sort of stuff, we would be buying the US dollar. I wouldn't sell the US dollar. Interest rates on the US dollar would potentially go up. The dollar would rise. It would become an investment vehicle. The swap rates would automatically shift to long only, and I would just be longing the US dollar. Yeah. If the US dollar then collapsed for 6 weeks solid for no reason whatsoever, you would not know how to deal with it. You can't deal with it because it's not fundamental, doesn't align with fundamentals. Banks and institutions are also going to be in the hole on this thing. Yeah. The options markets will be doing very well. Yeah. On these moves. The pension funds, I wouldn't be surprised if it's not long before you hear Bloomberg interviewing some of the pension funds about the potential bankruptcies, because the pension funds will be the wrong side of the options calls. They don't work the same way. So if you knew which way it was going, you'd do it, wouldn't you? This is the thing. It's a squeeze is only a squeeze because you're being squeezed. Otherwise, it's normal market conditions, isn't it? Normal trading conditions. But yeah, these are lessons, that, it doesn't matter how long you've been doing something. The market will has this habit of telling you you're wrong and showing you how wrong you can be. But, Trump, what can we do? We haven't got a choice. He's in charge at the minute. So the markets will do what markets will do, and they will just keep doing what they're doing as long as he's doing what he's doing. So unless there's an end to the Trump destroying the stock market and destroying the economy of the US and destroying trade relations and ally relations around the world, I don't see why this should stop. Because I don't know how much of this is speculative and how much of this is the market just going, everybody get rid of the dollar. Death of the dollar. And what's that going to cause? War. Yeah. If the economy of a rich nation declines to a point where it requires more mineral resources to give itself more power, they have to go and get it. Look at Ukraine. Anyway, we know about that. I'll be back Monday. Anything you need, let me know. I'll be around. I'm in Discord, so obviously I will be commenting on what's going on in Discord. Look at that lovely stop out. Look at that. Thanks for stopping me out at the absolute high of the day at 150 ADR. So yeah, I'll be obviously watching this like a hawk, and I'll be looking around in Discord when non-farm payroll comes out, and we'll see what happens. All right, so have a good day. Anything you need, let me know. Other than that, I'll be back on Monday. All right, have a good weekend.